We apologize for this brief interruption in the show. As many of you likely know, the Higher Standard podcast is officially sponsored by Transcend Company. Transcend has been my longtime provider for both testosterone and peptide therapies, but they offer so much more. Whether you're interested in health, wellness, or longevity, it all begins with you getting your blood work done. A lab draw will help you get the numbers and establish your baseline. You can go to transcendcompany.com/THSP. That's transcendcompany.com/THSP. Or you can click the link in the show notes on any streaming platform and on YouTube. Fill out your information and one of the representatives will contact you to get your journey started today. Now back to the show.
just how you picture it, that's exactly what it's like.
He's basically Elmo, but if he were to get a little larger. Yeah.
You gotta listen to Mind Pump.
Yeah. I've been trying, man.
Right, exactly.
He's back there making very funny faces. All right, well, take us away.
All right, let's go. Welcome back to the #1 financial literacy podcast in the world. Sitting next to me on my left is my partner in crime, Chris Nahibi.
And this is awkward with you going first. And sitting next to me, my partner in time, the man I like to call Bubbles, yes. Saied Omar.
Welcome back to the show, everybody. And behind the ones and twos, we got DJ Haroon.
Oh, this is so awkward.
Mm-hmm. You like it.
It's very weird for everybody.
Right. So what I want everyone to do right now is imagine being able to secure your family's future with just a few clicks. Our guest today is at the forefront of making that possible. We're thrilled to have with us Alessandro Chesser. He's the founder of Dynasty, a pioneering company that revolutionizing the way families create trust online. Welcome, Alessandro. We're excited to learn more about how your company is making estate planning accessible and easy for everyone. Could you start by telling us a bit about Dynasty and what inspired you to create the online platform?
Yeah, thanks for having me on the show. So the company's Dynasty, GetDynasty.com. That's the URL. This goes back for me, like everything that I've ever done in my entire career kind of led me to the moment of starting this company. Starting from my very first job at 16 years old, actually it was at a Bank of America.
I'm so sorry.
I was in high school and started at Bank of America when I was 16 years old as a teller. Like I was still in high school, and I ended up working, for different retail banks, Wells Fargo. I did Washington Mutual for a little bit. During the financial crisis. So, about almost a decade, almost about 10 years working in different sales positions in different retail banks. That gave me really good exposure into estate planning from an early age because, when you're sitting on the sales side of a retail bank and customers walk in the door, one of the first things that the banks train you to ask high net worth individuals about is their estate plan and their trust and how it's set up. It's one of the biggest ways that financial professionals can add value. And so, especially in the retail side, we were trained to look through the documents and be able to distinguish between revocable trust and irrevocable trust. And so I already knew the importance of these documents. Fast forward almost 20 years, and I wound up, I got into Silicon Valley startups. I wound up at a startup company called Carta. And at Carta, what we did was we digitized legal documents for startup companies and venture capital firms specifically. So before Carta existed, think about this like the way the stock market used to operate when you used to get paper stock certificates. I don't even know, like 30 years ago at this point, before all the retail brokerages. And so that's the way the private market used to operate before Carta. So it was like a couple of decades behind the public market. And so when an employee got a job at a startup company, for example, Uber, when Uber first started, employees would get paper option grants and investors would get paper stock certificates. And when an employee wanted to exercise their options, they had to fill out an exercise form and they had to write a physical check. And then they got a paper stock certificate and they had to file that in their filing cabinet. And so Carta, what we did was we just sucked up all the paper and we digitized everything and we created all the infrastructure that you see in the public markets. If you look at the public markets, you have stock exchanges, you have brokerages, you have the DTCC, the Depository Trust and Clearing Corporation, which is the central registrar for public stock. So you have all this infrastructure that makes it possible for you to log into your Robinhood account and buy shares of Apple. And so we recreated that entire stack at Carta. But the foundation of the company was just digitizing paper that law firms generated, all the legal documents. And so, putting those two experiences I had together, the early career working for the retail banks and learning about estate planning and the paper documents that were created, and then my experience at Carta of digitizing that paper, it just became a natural fit. Once I got pitched this idea for Dynasty, I had this aha moment in my head, like, oh, this is another set of legal documents that needs to be digitized. And it's super inaccessible. Most people today still do not have a trust. I think like 95% of Americans don't have a trust. And it's expensive to create one. It's expensive to maintain them. It's paper. You have to store it in a filing cabinet. And if you need to update it, how do you update the stack of paperwork? You have to go back to a lawyer. And so, we knew that it was an area that was ripe for disruption, and we wanted to digitize it and make it simple and make it as close to free as we can get it.
And so for most people who don't listen to the podcast, they know I'm actually a licensed attorney and I do practice largely pro bono. But one of the things that's always been the bane of my existence has been trust, because it's equally as painful for the attorneys to do it, because I'm bringing a client in, we're having like a super interpersonal conversation about your family, about the worst case of our, possible scenarios, things most people don't like to think about. And then when it's all said and done, I put together a trust which says, in a worst case event scenario that you are not here, what happens to your assets? What happens if you and your spouse are gone? And then, just like you said, most people will file it away. They go, okay, I paid Chris $2,500 or $3,000 or some egregious amount of money to do this with me. And then they do nothing with it. But then life goes on. They get more properties. They acquire wealth. Their kids get older. They may have different things that have happened in their family. Their trustees that they thought were going to take care of their kids that they were gone, they may pass away. So all these things happen, and that document becomes useless. And then guess what happens? Somebody will pass away, and they'll come back to the firm and be like, you screwed this up. And you'd be like, well, no, your life changed because, things went on. But who wants to come back to an attorney and pay thousands of dollars more to get an update, have that conversation again? We all work. I think what really attracted me to your platform in the beginning was, obviously there's somebody really sexy like you behind it, and I'm just, superficial like that. But because I think that there's an inherent value in having it all electronic and having it in a digital platform capable of reminding you, capable of getting you there.
That's right. Yeah, our tagline in the very beginning was that you should be able to update your trust as easy as you update your social media profile.
Oh, yeah, solid tagline.
Yeah, I personally love that. I mean, not only did you solve the problem of it being, not as accessible in the past, but I feel like after reviewing the website and going through everything you guys have on your social media platforms, you're also solving a huge problem for the average American. So how are you able to, find the gap, and fill those gaps that are needed?
Yeah, so, I think that's really why we've, I think there's this misconception that trusts are only for rich people, right? And so that's been one of the hardest things to overcome from the very beginning of starting this. We knew we could create the best product. We knew we could create a product that we have an entry level, like free version. It's super simple. You can do it from your cell phone in less than 5 minutes. It's so easy to do. You can do it while you're multitasking, right? And so we really try to dumb it down. It's like, all you're doing when you set up a revocable trust is you're deciding who should inherit your assets if you pass away or you become incapacitated. Like, it shouldn't require $3,000 in an attorney, right? And so I think the hardest thing for us was determining, how to take this to market, how to get mass amounts of customers to use this that, may not think that they need a trust. I think, most Americans, they think they need a will, right?
Right.
And so we that's one of our kind of our marketing pitches is a revocable trust is better than a will. Mm-hmm. Wills aren't, the rich people don't use wills, they use trusts, right? Because trusts skip probate court. If you have a will and you die, that will has to be processed through the probate court system. And probate, takes on average 18 months, and it's going to cost your family tens of thousands of dollars. And not only that, but it's public. Anybody can turn up and make a claim for your assets in probate court. Literally, my neighbor, can show up at probate court and say that I promised him half my inheritance, right? And so this process is extremely painful for families, and it also causes a lot of disputes between family members. It tears families apart. And so, I think there's when we wanted to figure out a way to bring this to mass market customers, really what we did was we narrowed in on a specific use case for the trust. And that's why if you look at our website, it's the easiest way to put your home in a trust, because we've narrowed in on homeowners. We said for most Americans, the home is the most important asset that they own. It's the most valuable for most Americans. It's the most valuable asset that they own. There's something like 80 million home owners in the United States. And so instead of saying, oh, create a trust and do whatever you want with it, now we're being very specific. You put your home in a trust. That's what you do with it. Because if any asset's going to have to go through probate court, most likely it's going to be your home, because those on average are going to exceed the probate thresholds. Every state has their own probate thresholds. So, for example, for California, it's like $180,000. Most homes are above $180,000 in value. So they're going to end up in probate court. And so that's, that it's all about how we position this product that's allowed us to get it to the mass market customers, to your point.
That's fantastic. So by way of backstory, Saied and I started off underwriting loans, right? And we were looking at wealthy people and how they had their financial profile set up. We saw that wealthy people over and over again had trusts. We saw that their primary occupancy, their residence, was almost always in this trust vehicle. And we saw what happened when they pass away. So it goes from revocable to irrevocable, because now your testator, the person who made the trust, has died, and you have this irrevocable trust, which still is living and carrying on after you've died and carries out the expectation of the trust. Now, there's different ways that it gets all sent out to everybody you want, but the trust being on title gave you a cleaner track record of what happens to it. And like you said, you avoided probate. But yeah, that's a brilliant strategy. Saied and I talk all the time that for the majority of Americans in the United States, the majority of their net worth will come for their home price appreciation and the equity over time. And that's a fantastic way to start. So I know for a lot of products with social media carrying a huge advertising base, people get on social media, they look at their phones, they go, okay, hey, I want this. Are you finding that most of your user adoption is coming that way, or is it outbound marketing? How does a client find you in most cases?
Yep. So when we started this company, it was 2 years ago. So right when the economy started to take a nosedive, right?
Mm-hmm.
And so the first, and from our prior experience at Carta, like we saw the old Silicon Valley model of raise. Carta raised $1 billion in venture capital and just spent money all over the place on marketing and advertising and sales. And so we knew that building a company during a recession, we cannot be that type of company. We have to be smart. We're not just going to go spend money on Facebook ads. And especially talking to investors in the very beginning, no investor was going to give us money if we told them we were just going to spend it on marketing. They don't want to hear that, right? So we had to come up with scrappy, organic ways of growing this. So first and foremost, our number one strategy for customer acquisition is building the best product that exists, that the cheapest, easiest to use product. And so something like 30 to 40% of our customers today come from word of mouth. So somebody signs up and then they go tell their friends and family about us. And so we always knew that needs to be our number one method for customer acquisition. That's why we have a free product. Like literally, you can create a free trust in less than 5 minutes with GetDynasty. And so we knew that was going to be the most important one. Second to that, we started experimenting with short form video, TikTok video, Instagram Reels, YouTube Shorts. So we started out with me just making some. I'm a terrible actor.
I was going to say, I'd love to see you on TikTok.
Oh, I'm terrible. I'm because I like sales, but I do not like talking to myself in front of a phone, just staring at myself. It is very, very difficult for me to do. And so we did a little bit there. I had some videos that, I think got 100,000 impressions. TikTok is a little bit easier to go viral, I think.
Yeah.
And so, we got some good traction there. And since then, we've actually invested in creators, and we get actors to come in and we write scripts for them. And we actually have had some that have gone, 500,000 organic impressions on TikTok. And it's the same type of thing. Here's what the rich people do. You should do it too. Here's why every single home should be in a trust. Here's why trust is better than a will. a lot of the content that actually goes viral for us is also talking about irrevocable trust. So that's our premium product, right? So the mass market product is this free revocable trust product that helps you avoid probate court. The premium product, that's what helps you protect assets from divorce and lawsuits and creditors. And so that's how we actually make money. And so the short form video has been very effective for the irrevocable trust. But our number one strategy for customer acquisition today is actually partnerships. You mentioned you come from like the loan industry. That's what we're doing. We're partnering with mortgage brokers. We're partnering with title companies, and we're embedding ourselves into the home purchase process, so that when somebody's buying a home, their mortgage company will ask them, "Do you want to put it in a trust? Because if so, here's a free way to do it in 5 minutes. You can get it done right now, and the home goes straight into a trust. You don't have to transfer title after the fact, right?" Brilliant. And so that's the number one form of customer acquisition for us today. We're going the partnership route, B2B. And we have a really solid partnership that we are launching with a big mortgage company, Guaranteed Rate. I don't know if you're familiar with Guaranteed Rate. They're like the third largest independent mortgage broker in the country. And we have some other very, very big partnership opportunities that we're launching. And so I think that's going to be our number one form of customer acquisition going forward. But we're always going to be focused on the product. So, word of mouth is super important as well.
That's a fantastic entry point too, because that's when most people should be thinking about it, given that that's their, biggest asset. So I know that I personally, whenever I talk with people with trust, and even myself as an attorney, there's lots of things that get confusing. How much of your time is spent educating clients on what a trust is actually going to get them? Because let's be honest, nobody gets a financial literacy course in school, and you might hear these things and have like a general high level of understanding. But it's rare someone goes, "Oh yeah, I know what an irrevocable trust is."
Yeah, no, it's very difficult. This is one of the hardest things. I think we try to create as much educational content through the short form videos as possible. At some point, we're going to embed those videos directly into our application, so that when you're using it, we haven't done that yet. We're a small, scrappy team, but I think videos are going to be a good way to educate people. Other than that, we just try to create as much content as possible. We can't talk to everybody, right? Yeah. We have thousands of people signing up every single month for our platform. And, we've basically said, if you're coming in for free, you can't talk to anybody. If you want to talk to somebody, you have to sign up for our subscription, which is $99 a year, still super cheap. And so those individuals were able to, we have a customer support team. We're able to answer basic questions for them. We can do it pretty quickly. Like, our customer support team, we set up 15-minute phone calls with our customers. Within 15 minutes, we can tell them exactly what it does. We can tell them how to get their assets into it, and give them the level of confidence that they need to use the product.
Right. So, and I know earlier you mentioned that, you can actually go onto the website and actually get a trust for free literally today. That's not an exaggeration. You go on there, it literally says $0, right? That's one of the options. And the other one was a fee of $99 a year. I don't know what it would be for the irrevocable trust, but also on the website, I saw that it said that so far year to date, you guys have saved families $1.3 million. Is that basically from saving them from going to probate?
Yeah, no, not even actually. The savings that we calculate is based on the normal cost that it takes to set up a trust, right? Wow. And so even if you go with like the cheapest online options today, LegalZoom or any of the other companies, you're going to be paying like $500-$600 to create a paper trust that you then need to go back to them to update, and they're not going to help you transfer your home into it. That's the most important part. A lot of people think they can just create a trust and they're done. No, you got to put your home in it. Yeah, you actually need to transfer the title. Yeah. That's the hardest part. None of the online trust creators help you do that, which is why attorneys are still used the majority of the time. And so that's where we're further innovating. We're working on automating that process. So not only are we embedding into the home buying process, which makes it so nobody has to do the actual deed transfer, but we're also automating the deed transfer for people that have already bought their home and need to transfer it with the county. And so that process is extremely manual today. It's a great opportunity for us to get in there and create automation and make it easy and cheaper for people.
Talk about an outdated process. I have so many frustrations with the title process, both from a banking perspective and also a legal perspective about how, because you have things like the blockchain, which I know people talk, Saied hates cryptocurrency. He's a hater. The crypto bros hate him. But the blockchain is such a perfect structure to have like instant recording of things like this for title purposes. And it should be used that way. I'd be fascinated to hear about how you're automating it. How do you plan on doing that? Do you have any details on that, or is there any like backstory you can share with us there?
No, I can give you. I mean, it's pretty. So, yeah, blockchain would be great. I think the counties or state governments are usually very against something that they can't control, right? So that makes it very difficult for them. I think Wyoming actually has been the first state that allows property to be owned by a DAO, which is a decentralized autonomous organization or something like that. It's like basically like a blockchain version of LLC. But what we're doing is so every single client that wants to do a deed transfer with us, we do it manual the first time, right? And so, like, let's say you're in Santa Clara County, California, we go and we have attorney partners. So what's the forms that are? Here's the quitclaim deed that's required. Here's the additional documents that need to go with it, right? So then we get those documents for that specific county and we turn them into software, so customers can just answer the questions online and we automatically fill out the form for that. So that's like part one. Part two, a lot of these documents actually can't be filed electronically right now. These counties are so backwards. They require paperwork. They require manual, physical wet ink signature, physical notary. Well, the nice thing is we actually have built out this because, we have this like electronic trust product, but for the $99 a year, the upgraded subscription, for anybody that wants to go through a remote notary session, we have that baked into the $99 a year product. And so we built out this really robust process where we have a remote notary who's based in Montana. And if we need to produce paper for you, we can actually produce paper. We use a robotic arm. You sign digitally on your phone and our robotic arm will actually enter your signature on the piece of paper.
That's so
and
cool.
Our remote notary will stamp it and send it to the county. And so in the very beginning, we were like, how are we going to do this? But we did a bunch of research and, there's like President Obama, he signed bills this way using the robotic arm technology. When he was like overseas, he would like sign and he would create paper using the robotic arms. And so we wrote some software, we bought our own robotic arms and we embedded that into our product. And so anything that actually requires wet ink signature to be recorded, like we can do that all digitally for you using the robotic arm.
And Said's a pervert, so he's already thinking of ulterior reasons.
Robotic
arm.
Yeah, if you weren't sold by now, now you got to be sold, right? Robotic arm. I mean, how cool is that?
I've actually seen this in use, and there's a couple versions of this which are really cool. Like Texas will do like a remote notary, but it won't give you wet ink, right? And then I've actually seen this done. It's really exactly like it. It's fascinating. Number one, that it's legal. Yeah. Because you're like, how is this a loophole that everybody's just comfortable with? Right. And number two, it's literally like a robotic arm signing as you sign, and you're like, this is where the point we're at, America. Yeah. Like you can't just give me I can't just give you a digital signature. This is gonna make you happy.
I know.
Yeah. Exactly.
I know. It's ridiculous. It's ridiculous. It's legal. I mean, if anybody tries to challenge it, like presidents signed bills, presidents signed laws this way, right? So they can't. There's precedents. It can't be argued.
Well, so much of this industry is archaic. I mean, like the banking industry, the loan industry, the legal industry, they are so archaic in so many different ways. And I honestly, I think it's a lot of people just trying to hold on to their jobs by making things be more technical and just in the way. But maybe it's just my perspective. So you're 2 years old, right? That you guys have had fascinating growth, particularly in the 2 years that you did grow. What did you see yourself here as an entrepreneur when you started this? Were you like, okay, 2 years, we're gonna fucking crush it, it's gonna be amazing, or are you stunned of how the growth has been?
For me personally, like I'm the type I always want to go faster. So like it's never going to be good for me. I want to be going faster. I don't want to be raising more capital. Like we've raised $5 million in venture funding. We got some really good investors. Some of you may be familiar. Bill Ackman was one of our early investors.
Yes,
we got quite a few billionaires that invested in us. It turns out that the richest people really care about this product. They know how important it is because they have to deal with the boxes full of paperwork, right? And so, to that point, like I think I'm happy with where we're at, but like I'm looking forward and I'm like, how do we get 10 times bigger in the next couple months? Like that's always how I'm thinking about it.
Right. So, and I mean, we briefly touched on this before the show, but I asked you to save your answer. You go from a company like Carta, like we previously mentioned earlier in the show, and you were there part of the original team, right? And now you come over and you start, Dynasty, GetDynasty.com. what is it? What is it that you think that you have that maybe separates you from other people that makes you willing to even start this and have the confidence to, pursue something like this?
So I guess you guys know my cousin Sal Di Stefano from my
What?
Oh wow! Yeah.
So we come from he's like a brother to me. We're all cousins, or us cousins are very close. The boys especially. We come from a very competitive family. Not competing with each other on everything. And of course Sal's one of the oldest, so he used to win everything. Still nowadays. But I think like, and it comes actually from my grandfather, my deceased grandfather at this point. He 9 brothers. He grew up with 9 brothers, super competitive. I don't like to lose in anything I do. Like I'm not a sorry loser if I lose. I'm a very respectful loser, but I don't like to lose in anything. And I think that specifically what gives me an unfair advantage is that we started this company during a recession. And so it's forced us to think about growing organically, not raising as much venture capital financing, staying lean. We only have 5 full-time employees at this point. And I think that's our superpower. We will never go out of business ever. Like we are not burning enough money, and like we are going to be patient with this thing. And most of our competitors, they started during the zero interest rate time periods, and so they're bloated with venture capital financing and unrealistic investor expectations, and so they're losing money hand over fist, right? And so you can see it. And when I look at them, they're just aiming for an exit. They want to get out. We don't want to get out. We know that the path to winning is outlasting everybody else. Like that's kind of how we look at it. And so as much as I want to grow faster and faster and faster, like we don't need, the truth is like, we want to be the last company, not the fastest company. And I think that's our unfair advantage. So kind of tying that all together, I think like I'm a super competitive person. I'd like to think that the advantage is kind of my upbringing and how I look at these type of things. But, I think our true advantage is how scrappy we are and how capital efficient we are, and how we've gotten to the point now where we only have 5 full-time employees and we're getting thousands of people signing up for our product every single month. And, I think we have these paths to get much bigger with these partnerships that we're working on with mortgage companies and title companies. And so I think that it's our leverage, our ability to get really, really big with a small team. That's our unfair advantage.
I've done the capital raise thing before, and I know how difficult that process is, particularly when you're starting a company and you have an idea in your head and you're trying to get buy-in, especially in the early adopters. You're trying to get them to believe in what you see as a real economic possibility. And then you're trying to show, look, I understand you're looking for EBITDA and you're looking for a multiple, and you're looking in part, some of those conversations, they're even talking about exit strategy on a one day, when you get to this much number and this much cadence. How difficult was that process for you? Was it organic? Some entrepreneurs will tell me it was incredibly easy. We had the idea, and then some will tell me it was a nightmare and it was difficult.
We kind of had both experiences. The first $2 million we raised, we went 100% win ratio. Every investor we talked to invested, every single one of them. And so that was the first go around. The second go around, we just brought in another, $2.5 million a couple months ago. That was a lot more difficult. I had to talk to quite a few investors in order to get a lead investor committed. And the pitch was evolving, and, we're selling them on the dream, the future dream, to your point. And I think what started to make it a lot easier, we actually started trying to fundraise, in October. By December, we didn't have any good lead candidates. And so what happened was we started, backs were against, we weren't like running out of money just quite yet, but we knew that in order to do kind of some of the things we wanted to do, we need to raise more money. And to me, as I mentioned, how competitive I am, I wasn't going to go to market and talk to investors and not get around it. Like I had to get it done. And so with our backs against the wall, what made it a lot easier was I actually just started relentlessly focusing on the business and getting traction. We started getting traction. Our customer acquisition numbers started doubling and tripling like in a very short period of time. And all the investors started, running into wanting to invest us. So I think that was it. Like it comes down to this. In this market, you got to get traction. Mm-hmm. You can sell the dream, but if you can't prove that it's possible for you to accomplish that dream, it's going to be difficult for you to fundraise. And, I'm not the type of person that wants to go begging investors to invest. Like I want them to be begging me to let me into the company. Mm-hmm. And so, it's all about traction. That's any advice I can give the most important piece of advice I can give any startup founders today is like, worry less about selling the dream and worry more about getting traction right now. Any type of proof points you can get for your company, like showing that you can grow your user signups, showing that you can grow your revenue, showing that you can pull data to show like how valuable these customers are. One thing that we looked at right away was, even though we built this product for mass market customers, we're still not accomplishing our goal yet because the average customer that signs up for our product has an average net worth of $2.3 million. And so we saw that and we're like, okay, well, that's a good thing to tell the investors because now they see like thousands of people per month with an average net worth of over $2 million. Like, okay, there's going to be lots of ways we can monetize this in the future. And so just traction and proof points. I think that's the most important thing if you want to raise venture financing in a down market like we're in right now.
I think a lot of people are really interested in this topic, so I'm going to spend a little bit of time with you on this one. One of the things that I think most people don't understand is whenever you go to raise capital, having an anchor or a lead investor is always really important. So much so that you're going to get two big things from them. You're either going to get one, name cachet, somebody who's like a Bill Ackman, for example, billionaire, tech investor. His name brings other investors in. If Bill's in, I'm in, right? Mm-hmm. Or two, you get somebody who's going to bring a big chunk of money and saying, I believe in this product. I'm putting up this big chunk of money because I believe in it that much. And everybody goes, oh my God, if so-and-so believes in it that much. And in an ideal world, you get both from the same investor. You get a big name with a big paycheck, and then it's subsequently easier to get additional capital to meet your capital needs or your desired capital raise round from other investors because they see those two things or one of those two things in the mix.
And is that because they look at the lead investor and say, even though I don't understand this space, I trust this lead investor?
Well, and one of the things that's tricky too, and this is a bit different in the venture space, but essentially what's really, really important is due diligence at a point where you have something to do due diligence on. In the beginning, it's proving your proof of concept, proving Alessandro's background and using your entrepreneurial spirit to sell them the dream. That's probably where your talents really shine through, is you believe in it so passionately as an entrepreneur. But you'll get a lot of guys who in the beginning in a venture round who will be very tech focused, where they can't sell it. They can't really put that vision in their head into reality. They just know the technical nuance behind it, and it becomes very difficult. That's why you see a lot of CEOs are more creative. They're not as creative. They're not technical. They're more salesy, more conversational, more networking focused. Mm-hmm. It's not because there isn't value to the strategy. It's because at the high level, it's selling the strategy to somebody else, whether that makes sense or not.
Yes, it does. Yeah.
So, Alessandro, one of my questions I think I ask a lot of entrepreneurs that come on the show, and I think might be interesting for you, is we started the podcast, for example, during the recessionary economy. We get and most of my businesses were started during a recession at some point in time. I know that there's both positives and negatives to doing it, but I also know that in everybody's journey, there's always this point where you feel like the odds have been difficultly stacked against you. Have you had that point yet? Do you feel like there was a point where you were like, okay, is this the right traction for the company?
I mean, it's hard. We've definitely made some pivots. I mentioned that, we're very specific now, like put your home in a trust, right? Mm-hmm. We didn't start out that way. And I actually got my butt kicked by our largest investor. He's, the richest person I know by far. He's richer than Bill Ackman. Mm-hmm. And so this guy, he flew out on his private jet and like told me to meet him at the airport. And, we weren't getting good traction. This was like 6 months ago, because I was in the middle of fundraising and I wasn't getting any lead investors. This was right at that point where, we started getting traction right before we started getting that traction. And so this investor, he's super successful. He's invested in a ton of companies in the past and a ton of very successful companies. And so he was like, he said, the best companies in the world can describe what they do in a very simple sentence. Mm-hmm. It's very clear what they do. He said, they do this for these people specifically. So like they do this very specifically for this group of people. And he's like, what's your sentence? You guys don't have anything. You're all over the place. And at the time I was partnering with Carta, going after startup shareholders. I was working on small business owners. We were trying to become a licensed trust company. I was partnering with RIAs. He's like, you're all over the place. You're never going to do anything. You're boiling the ocean. You're going to get nothing accomplished. And he's like, the way we were partnering with RIAs, and that's how we were going to monetize. We were going to get split revenue with registered investment advisors. And he was like, what are you going to do? You're going to build a nice RIA? And he's like, you're never going to build a monopoly if you do that. And he says the way you build a monopoly is you find the widest base of mass market customers that have a single problem for you to solve.
Fantastic advice.
And he was very specific. And at first he was like, I don't know what the answer is, but you need to figure that out. But then, like a couple minutes later, he's like, you know what? I know what the answer is. You need to help homeowners. He's like, you need to help homeowners put their home in a trust. And I started doing some research right away. I'm like, I already knew that the deed process was a nightmare. But it clicked because it was like, there are 80 million homeowners in the United States. 95% of homes are in a trust. It's a very specific problem. It's a really wide group of customers. And so literally we rebranded our website like the following week. And it's like the easiest way to put your home in a trust. And we just from like changing the tagline on our website, like we started speeding up just from that alone. And so I think customers had a lot, less confusion. They're like, oh, what do I do with it? I put my home in it. That's what I do. But then that started informing our product and what we were, our product updates, and it started informing my partnership strategies. And so like literally getting focused created the traction that allowed us to close our financing round within like 30 days after we made that switch. But before that, we were really strong. We weren't going to go out of business, but we were just spinning our wheels. And, we were like, how are we going to compete with these competitors that have raised way more money than we have? And they're blowing their money on television commercials and all types of Facebook ads. And we're like, we can't do that. We can't compete with them. And if it comes to losing money, they're going to lose way more than we are. So we have to get smarter. We have to get more focused. And this strategy really allowed us to do that, and it's allowed us to get significant traction in a short period of time.
It's overwhelming, isn't it? When you have, as somebody who runs a company, it can become so difficult to juggle all the things you have to do.
Right.
You got to have a website. You got to have clients coming in. You got to have customer service. You got to make sure that the product's being executed. Then you got to raise capital. Then you got to talk to your accountants. You got to have the finance in mind. You're running the business, so you have to understand that at the end of the day, what that business shows on a monthly and a quarterly basis as far as profits and expenses, that matters. You got to manage those throughout the quarter, throughout the year.
Right.
Saied, what were you going to say?
Yeah, so to your point earlier, you mentioned that, those who actually do have a trust actually put their home inside the trust. I mean, as an underwriter, especially in the commercial real estate space that we're in, our first source of repayment has always been the property, right? The cash flow of the property. The second is always the equity of the property. And then the third is the sponsor, the individual themselves, right? I know obviously in California, we know we're a single action state, but besides the point, you still want to make sure you grab as much as you can. A lot of times what we'll see or I'll see is, and not to say that it's intentional, but sometimes when borrowers are submitting their applications, they'll fill it out and they'll say that they'll forget to leave off that they actually have a trust.
Yeah.
And the first thing I do every time I see that, I always go and I check the house title. Sure enough, it's held in a trust. Yeah. And I go, I'm gonna go ahead and need that trust too, boss.
Well, that's also yeah. He does do that. That's the way he talks.
That's exactly how I say it to him too.
But and that's true. But it also kind of highlights one of the benefits of what GetDynasty is able to do to you, because you're paying a subscription service. There's a built-in reminder to look at it and be familiar with it on an annual basis. And I know it's going to sound weird. Even at $100, if you're paying $100 every year, you're going to go, oh my God, light bulb moment, trust. Let's look at it. I'm paying for the service. Let's get it updated. What did I buy? And in a perfect world, everybody's financial position should be improving every single year. Some kind of, even incrementally, right? And sometimes that's reflected. But there's also, as you get older, and you don't have to be 100 years old for this to happen. In my 30s, I started losing friends. People around me their lives started changing. those things all impact your trust.
Oh yeah, absolutely. And you can see, I mean, even like as you get married and you have kids, I mean, these are things that constantly need to get updated, right?
Yeah, the kids part's huge, and we all have kids here. I'm sure family's all big to all of us. I'm sure you know that. But so walk me through this then. So you have this aha moment. This investor flies out. He says, "Okay, here's the structure." Were you as an entrepreneur open to that feedback, or at the time did you have to think about it right away? Where you knew like this is it? Like the moment was there.
It clicked for me immediately. And we have a lot of investors. They give me all types of advice, and I want to be respectful and acknowledge their advice. But like 99% of the time, like we're not taking their advice. I'll take it back to the team, and my partners are a real pain in the ass sometimes. They disagree with everything that I bring.
Mine are too.
My partner too. Yeah, my partner. Yeah, both of my partners.
And so that that to me was like I was sold right away when I heard this. It just like made so much sense to me. And so the next thing I had to do was I had to go back and get my partners on board with it. And they didn't get on board right away, but like once we rebranded our website, like they saw the traction, they couldn't deny it.
What was the initial
so
pushback?
They're all.
What was the original part? What was your partner's initial concern on the pushback? What was if you can share anyway? Were they hesitant to just change the direction, or were they concerned about how that would change the company?
Yeah, I think they were worried about like, if we just change it, we're going to get less customers and pivoting all. And me, I'm kind of a crazy sales guy. I always have ideas, right? And so like this idea is for this week, and then next week is another idea. Next week is another. And these guys are like, they're building the product, right? Like they're the team building everything. I'm just coming up with a lot of the ideas, and they're always getting frustrated because I make them build something, and then I'm like, scrap it. We're going to do something else. And so I think they just like were tired of the whiplash, and they weren't sold that, it was the right move for us. And so I think nowadays what we do, instead of like arguing, my idea is better, your idea is, it's like, let's try it and let's look at the data. And the data will decide if we continue doing it or not. We're early enough right now where we can change our tagline on our website pretty easily, and it's not going to have a material impact one way or another. We'll see what happens right away. And so that, we did it. We looked at the data. The data was strong, supporting that this was the right decision. And like, it's really, we've been pulled that direction. And so we try to get away from, who's got the better idea at this point. And it's just like, let's test as much as we can and look at the actual data.
It's a very common theme with entrepreneurs who are successful is that malleability to be willing to try those things. And we've had a number of people on the show and guests that come on that had a clear vision when they started, and they were very insistent on it. And that vision almost always changes. Even with our show, when we started just the podcast as a business, I think what we had in mind and what we're doing now is not the same thing. But that adaptability really, I think, gives people the best beta test you can do of your business is to test your business in different ways. But so many people are afraid of the downside of deviating from the vision, right?
Yep. That's right. And that's, we're early enough where, my co-founders were like, what if it just like completely kills our customer signups? And I'm like, fine, who cares? Like, we're early enough at this point where we can survive. We're not going to kill our business. Like,
and lean enough.
We can, we can do it now. We won't be able to do this 5 years from now, but we can do it now. And so, because I had to tell them multiple times, if we continue doing exactly what we're doing, we're not going to be in business 5 years from now, right? So we have to be able to experiment. And so this goes back to our time at Carta in the very beginning, 2014. Henry, our CEO, he on all of our conference room doors in the office that we had like 15 people in Mountain View. Our conference room doors, they had all these like titles on them. One of the rooms was called Iterate Often. It's like, we need to iterate. We always need to be iterating. This is when we have to be doing it, because it gets much harder to do. Now Carta is like a couple thousand employees, over $400 million in annual recurring revenue, over $1 billion in venture capital investment. Like, they can't iterate. And so the time to do that is in the beginning. And that's when it matters most, because like Carta now is like, it will never go out of business. They make way too much money. They put together way too good of a business. And so that's why they can't iterate. But, back in the early days, it's a matter of survival. You have to do it if you want to survive.
Yeah, I mean, no different than what you would tell somebody, a young adult, like you might as well start a business early, young. And if it fails, it fails, but you're learning a lot in the process. Trying to start something later on in life just becomes that much more difficult, and you might not be able to do it given your family circumstances, right?
Yeah, and a lot of the younger entrepreneurs in the
That's
show,
right.
listen to the show, it's shocking to me still. Like, I've got a lot of younger siblings too, and there's a clear disconnect in growth in the ones who started a business earlier and learned like the business along the way, and those who work for somebody else. I think they all get to the same point in maturity. It's just they see different sides of kind of the entrepreneurial equation. But there's something so intimidating about building a business. And I don't know what it is to most Americans. I think it's just we stigmatize it as being the boss in school, that we don't really appreciate that being a boss is not always the easy thing to do. Making those tough decisions is very difficult. So let me ask you a tough question as one of the co-founders. 5 years from now, you're competitive. You have something in your mind that you want. What does the business look like in 5 years?
So we are creating this really wide top of funnel. We have like all the thousands of customers signing up every month for the revocable trust product.
Yeah.
Really, our big vision is to democratize. Not the revocable trust is like that's free. There's a $99 a year upgrade, but like we're never going to make too much money doing. That's not going to be a massive $1 billion a year business. Where we think the real opportunity is democratizing the irrevocable trust, specifically the South Dakota or Nevada, asset protection trusts.
Mm-hmm.
And so when I look at these billionaires that invested in us, they don't, they live in California. Their money's not in California. Their assets are in South Dakota, or they're in Nevada, or they're in Montana, or Wyoming, or in Delaware. They have them in these states that have zero income taxes, zero dividend taxes, zero cap gain taxes. And also they're completely protected. If these individuals get married, they don't have to do a prenup because the assets are in South Dakota. They're protected already. And so if they get divorced, the assets are separate from them. They don't own them anymore. Their South Dakota trust owns them. And they have a South Dakota trustee that is custodying the assets for them. And so when we look at this and we're like, the richest people in the United States, they have their money in South Dakota and Nevada. We want to democratize that and make it available for everybody. Like your stock trading account for your children, that should be if you live in California, that should be in Nevada, just like the billionaires do it. Mm-hmm. Like why should the average American have to be paying all these additional taxes that the billionaires don't pay? And so we want to democratize that. And so whether or not you agree with this strategy of like getting around the taxes, like it's legal. The richest people do it today, and we want to make it available for everybody. We think that's the real big opportunity. That's the premium product. And so we want to make that much more affordable and simple for people. And that's where we think that there's a massive business opportunity for us. That's where the revenue is going to be. So 5 years from now, we want to be the company that democratizes either South Dakota or Nevada trusts. Mm-hmm. We think that it should be the point of anybody who has $50,000, if they want to protect that from divorce or loss. A lot of business owners, they have a lot of liability issues, right? Like they get sued. And if you're worried about protecting assets from lawsuits or divorce or whatever, like you should have the opportunity to create one of these Nevada or South Dakota trusts, and it should be no more than a couple $100 a month.
That's fantastic. Let's break down some stigma things here that I think are really important for an educational purpose. So state by state has different laws as it relates to the liability for taxes, and there's a lot of stigma to the idea of tax avoidance strategies. Wealthy people have gotten one concept down that most of Americans don't: the ideology of cheating. Americans go, hey, if you're avoiding taxes, you're cheating. And it's like, no. There's two ways to play the game of capitalism. You can fight the system and be upset about it and not play the game the way it's meant to be played. And you probably will get taxed the most, earn the least, and be frustrated that you never really got to where you wanted to go. Or two, you can take the alternative path and play the game by the rules that are in place the way it's meant to be played. People criticize billionaires for not paying taxes, and I'll use one that's very stigmatizing: Donald Trump. He is a real estate owner and investor. He's taking advantage of the passive income benefits, particularly of LLCs, vis-a-vis that ownership across the country. So yes, his tax basis is lower. Whether you love him or hate him or his politics or whatnot, that's a separate conversation. But the fact that the man pays very, very little taxes is a byproduct of having, one, lots of attorneys on staff, two, having lots of accountants on staff, three, having a good
estate and tax planning strategy, and 4, executing on it.
Mm-hmm.
And it does largely revolve around the tax implications of where your assets are housed. In some states, like Nevada, for example, if you have Nevada trust powers, you have a Nevada trust, you're avoiding all of the bureaucracy you would normally have in California for taxes. And let's be honest, California is the highest tax state in a lot of ways.
Right. Absolutely.
So to your point, I think there's just this like social stigma around tax avoidance strategies. That, I mean, have you tried like a TikTok or short form format on this topic and seen how people respond?
People love it. This goes viral the most. Here's how the rich avoid taxes. Because for us, it's not about like cheating the system. It's about leveling the playing field, right? Because the laws aren't going to change overnight that don't allow Donald Trump. They're just not going to happen. The richest people control the laws, right? Like the laws are built for the richest people. So instead of thinking that we're going to change the laws, we want to make it available for everybody. We want to make it available. The same products that Donald Trump can get, we think everybody should be able to have. And he uses irrevocable trust.
Yes, he does.
That when he became president, he has all these businesses that he owns. And they weren't going to allow him to be president. It's a conflict of interest. He can't be president and own these businesses. And so what he did was he created irrevocable trust, and he put the businesses in the irrevocable trust, and his children are controlling them as the trustees. And so he doesn't own them anymore. They're all set up for his children, right? And because of that, he created that layer of separation. It's like whatever happened. That's why the richest people can file bankruptcy and still be rich, because like they don't own the assets anymore. They've given it to the irrevocable trust. It's set up for their children. And they have some sense of connection and control over it, but they're separate from it. And so we just want to make that, we look at that and we say, okay, these irrevocable trusts are one of the most powerful tools that the richest Americans, the LLCs are up there as well, but they usually go hand in hand with the irrevocable trust. And so we want to democratize that and make it available for everybody. We're calling it the billionaire package.
So I think
that's fantastic.
If the billionaires do it, you should be able to do it too.
I love that. I think a key distinction there for people that maybe aren't too familiar with this space is that the irrevocable trust and revocable trust, for that matter, they're viewed as their own separate entity. They can have their own, social security or tax ID numbers. Yeah. And you typically speaking, I think I've seen a lot of times where the revocable trust actually carries over the individual's actual tax ID number, but the irrevocable trust will have a completely different tax ID number. So that's how it's viewed as a completely separate entity. I mean, and to your point earlier, a lot of times I'll have friends and family talk about, what key strategies do you learn, underwriting all these rich people all the time? And I say, listen, man, this tax system, you got to learn it. And like you said, you got to either play by the rules or you'll be asked out. Because a lot of times I'll underwrite somebody, they'll be making $20 million a year in rental income. And then they'll ask me, how much do they pay in taxes? $0.
Yeah. And that's a byproduct of the system. People get so caught up on the political arguments and getting angry about this stuff that I always kind of look at them with this like blank stare and think to myself, you should not be asking why they're not paying taxes. Yeah. You should be asking how they're not paying taxes.
Absolutely.
And
because they're not cheating.
No.
I think people think that they're cheating. They're playing by the rules.
Yes.
The rules are set up and they're playing within the rules specifically, and they're not going to change. You're not going to put Donald Trump in jail because he's using the rules to avoid taxes. It's just how it works. The rules are set up in order to do that. If you set things up very specifically with your trust and your entities, your LLCs. And so we just want to democratize that. We want it to be available for everybody. That's all.
So I obviously, I'm sitting here thinking to myself, okay, all the tax strategies that I've seen, I would imagine at some point in the future, this may or may not be on your radar, that you guys are thinking about, okay, we could offer a more robust and broader tax package by saying, hey, we can also help put your property, the investment property, in an LLC, and then your ownership of the LLC is in a trust. Very common. We see that all the time. Individual owns a trust. The trust owns an LLC. LLC owns a property.
That's right. Yeah, no, we're going to be adding LLCs. It's just a matter of time. Absolutely. And, I think that the way that the product is being set up today is like our top of funnel is like probate. This is what you do to avoid probate. It's free. And then our bottom of funnel monetization strategy is here's what you do if you want to reduce taxes, and here's what you do if you want to protect assets from lawsuits, divorce, creditors, whatever.
I love it.
Yeah,
I'm a big fan of the business. Believe it or not, and I'm going to tell you right now, I'm actually going to go online and I'm going to do this myself with you. I have a trust, but I have not updated it, and this is terrible. I'm an attorney. I have the ability to do this. It's just sitting down my wife I'm actually going to sign up for the service myself. At
you
some point
you
in
have
time.
my word too. I'm going to go online and do it.
His word is word meaning.
And I'll give the listeners a full recap.
That's a lie. Don't believe a word. He said
it's the truth.
He said he was going to get his real estate license, and he never did. It's been a year and a half, 2 years maybe.
Because we started the podcast.
Don't do that. Don't do that. Yeah.
Hey, creating urgency is a tough thing in this space because people are like, I need to do it, and they never do it. And I think that's why we're embedding into the real estate purchase process, because now you have real urgency. Your home is closing. You're closing on your home. Do this before you close, and it's going to be free.
So typically speaking, the way this works for most lenders, especially those who sell to the GSEs, Freddie, Fannie, is they're going to say, okay, hey, do you want to put it in a trust? If you say yes, it literally goes from your name, quitclaim deed, right into the trust, contemporaneous with close, all at one time. You never have to think about it. And the best part is you don't have to worry about doing this later on and changing names. Let me ask you this. Do you guys have a way? One of my favorite things that I do with trust, and this is more of like a nuance that I like, is I don't like naming the trust the Saied Omar Family Revocable Trust, dated whatever. I like to say the SO Family Trust or the S Trust, because it gives one more separation of your name to what the actual trust ownership is.
Yeah. So that's part of the upgraded $99 a year package is you can customize the name of the trust to whatever you want.
Yeah.
And that's revocable trust. They give you, there's really two things. Number one is probate. Number two is privacy, because like you don't own your property anymore. Your irrevocable trust owns it. And you can call because property records are public, anybody can just go look and see who owns if they slip and fall in your lawn, they can just go figure out that you own the property and they can sue you. But if they look up the property records and they see that XYZ or the higher standard trust owns it, they're going to be like, who's this? They're not going to be able to figure out that you're the actual owner without getting a court order. And so it's a deterrent from them being able to sue you. So absolutely, I think like anonymizing the trust is a very important thing for people to do, especially if they own property.
And there's a big stigma to this too, where people are like, okay, you go with privacy, you're hiding something. And I own a lot of rental real estate, and I started figuring out somewhere around property 7 or 8 that I was going to have a problem being public and having my name associated with a trust. So I created a trust that doesn't have my name in it at all, that is clearly owned by me, but does not clearly connect to me. And the way it's structured is the trust owns an LLC. The LLC is a Delaware anonymous LLC. So in order, you would be almost impossible to find me at the end of the day. And people go, okay, what is he hiding? Why is he avoiding people? And I'm sitting here thinking to myself, that's exactly what I'm avoiding. People like you who want to question it. But more importantly, what it allows me to do, it allows me to operate without having to worry about people online trying to find things and go nuts. I'm not trying to treat people badly. I'm not trying to cheat the system. I'm trying to be a malicious investor. The last thing you want to do is have people look up your properties and do something to it or find a way to use that against you. And look, we all want some level of privacy these days. I know the internet's this wide open, cavalier, frontier. But the reality is when you start owning real estate, the last thing you want someone to do is trip and fall over the front of your house somewhere and then find a way to easily sue you or easily try to shake you down for money.
Or make, be felt like, oh, wow, this person owns how much real estate? Oh, they can afford to pay me off a little bit.
My request is now $1 million.
Yeah, thank you very much.
Happens all the time.
Yeah.
That's right. People target people who have assets, and the last thing you want to do is make it clear that you have a lot of assets. There's no reason to do that at all. And so that's, everybody, like, we think that everybody should have, if you own property, if you own real estate, everybody should have a trust. You should get one as early as possible, because the longer you wait, the more stuff you're going to buy that has to be transferred after the fact. Versus if you create a trust very early on, before you buy your first house, before you create your first investment account, those go straight in the trust. You never have to retitle anything.
And one of the things
I actually had a question. Sorry.
Wow, look at that. The thick voice in the back.
I already cleared my throat, too.
Oh, you did?
Are there any restrictions on the types of assets that can be included in Dynasty?
The only things that can't go into a trust are going to be retirement accounts and life insurance policies. So those, you can either make the beneficiary, you can make it your trust. But I think for life insurance policies and retirement accounts, talk to a financial advisor, because depending on the state you're in, you can get a step up in cost basis if it goes straight to a beneficiary at the point of death. And so, if you just want to avoid probate and you don't care about the step up in cost basis, then you can just make the trust your beneficiary. But your trust cannot own your retirement accounts. Those have to be owned by you directly.
So what I do here is all the retirement accounts and my life insurance, I have whole and term, are both in my individual name, but the trust is a beneficiary. So in the event that I pass away, my wife doesn't get it. My wife gets her vested interest in the trust, which are those assets. Now, there are some tax implications, like Alessandro was saying, but I honestly chose, it's just easier for a symmetry purpose to have that be the end goal, because it basically means my wife can read this document. It tells her what her rights are. It tells her where it is. And this is a great example. One of the things that I did when I got married is I made the trust the beneficiary of all these things, and I created this trust, and I made the trust the beneficiary. But I sat down with my wife, and I showed her the list in the back of the trust, which showed her all the elements that were in the trust. These are what the trust owns. You, my wife, need to get familiar with these in the worst case event scenario that I pass away. But I think there's also a good lesson here, too, and Haroon, to your point. A lot of younger people will say, okay, I'm not married, I don't have kids, I don't own real estate, I shouldn't have a trust. And I think to myself, no. You should have a trust. You start one now. All the assets you acquire that you plan on acquiring, you want to be successful, great. I hope that you are. You start a business, the trust ownership, the trust can own that business. You should do those things and have your trust own them, because let's say you do get married and you want sole and separate property if you're in a state that acknowledges that. What you're doing is you're putting an insulation between you and a marriage, between you and a lawsuit. Yep. Let's say, I don't know, you have a podcast and you say really inappropriate shit from time to time, okay? If your assets are in a trust, no one's going to be able to sue you for the inappropriate shit you say in the podcast and get to those assets.
Right.
So there's all sorts of reasons that you don't have to be at that level yet that it makes sense, but people generally don't logically follow that conclusion down its most logical path. We all get older. We all generally acquire assets over time, unless you're a weird yogi like Haroon back there.
Yep. And that's why the most important thing is, the number one reason why you shouldn't have a trust is because it's expensive. But for us, we eliminated the cost. We made it free. We made it simple for you to do in less than 5 minutes from your mobile phone. We take away all the excuses. There's no reason why you should not create one right now. In fact, you can go see a lawyer later if you want to. If you want to go do the full experience later, but at least you have the trust today, a simple version of it. Yeah. Like everything that you buy can go straight in that trust. You're never going to be unprotected. But because we've removed the biggest issue with it, the cost and the complexity, like everybody should have one. That's our vision. Everybody should have one.
Yeah, honestly, my biggest hurdle isn't even the cost for most people. I think it's the time of sitting down in front of an attorney, going to a law firm, sitting there, having this conversation, and then taking your time off work, driving there. If you have kids, someone's got to watch your kids. And the logistics become very difficult. And then you're doing this once a year. You get to the point where you're just like, I don't want to. I can do it myself, and I don't want to do it.
Right.
You know what I mean? It is what it is. Alessandro, look, I value your time. I know that we committed you to an hour. If you want to go over, we can. I do want to give you a ton of shit for Sal being your cousin. And
no, he's absolutely amazing, as you are.
And he's part of the reason we have this podcast, candidly. If it wasn't for him, there would not be a higher standard.
Yeah, I mean, you'll see that behind us here, these phone panels, this is our way of paying homage to the crew over there.
Yeah, I mean, obviously it's a penis thing, and theirs is bigger than ours. But we like to say it's not the size of the studio; it's how you use it.
There you go. Hey.
You want to give us one last plug before we say goodbye, my friend? Tell everybody to go. Yeah, go to GetDynasty.com.
Yeah, every single American should have a trust, especially if you own real estate. GetDynasty.com. It's simple. It's easy to use. You can do it next time you're sitting on the toilet scrolling TikTok. Like, instead of doing that, take 5 minutes, set it up, and protect your family forever.
All right. We will have all those links, obviously, in the show notes on all streaming platforms. And if you have any questions, reach out, and we will put you in touch with the man, the myth, the legend, Alessandro, and his team will take care of you. Saied, anything else?
Yeah, Haroon, you got anything else?
Nope.
Well,
thank you very much for your time, man.
Yeah, we appreciate you. Thanks for
coming
coming
Alessandro,
on,
you're absolutely amazing. Thank you, my man.
Well, you can take
Thank you for having me.
All right. Well, good night, everybody.
Goodbye.
I hate it.
I know. I do the awkward version. It's so good. It's formal.
All right.